Hey guys, Mike here. So, oh boy, what a snooze fest I think it was today. At least that's kind of how we describe it in the Discord. I'm going to show you how it was literally just like a roller coaster. And in case you didn't believe me about what I said yesterday about these big ticket items not being sold, this came out after I put that video out showing that last year's sales for vehicles actually ranked the lowest since 2011 when the industry had only just begun recovering from the financial crisis and sold 12.7 million cars. So that, and I also heard that people with excellent credit scores are being offered between 8 and 10% on auto loans. And if that's true, oh boy, that's a hot mess. I ain't seen that since basically before '08. If you remember what actually interest rate used to be in '08, that was actually kind of normal, but didn't blink an eye at it. And that could also explain why you're seeing younger people all of a sudden between 18 and 29 being late on these car loans, because if that's the first car you're buying, you don't think nothing about it. That's the only interest rate you've ever seen. But if you're like us, who went from 2008 to 2022 or whatever it was, or 21, sitting there at 2, 3, 4% maybe, and all of a sudden you're going to offer me 10%, I got excellent credit? I mean, come on. So if that's true, put it down in the comments. I've heard that from a couple people now. But, the big thing today was everybody's waiting for ADP payroll, right? Oh my God, do we still have a hot job market? And the answer is yes, we do, folks. So obviously came in higher than expected. What does that mean? People say, oh my God, the Fed's going to have to tighten. They're going to have to keep tightening. Even though they keep telling us that, and the bond market don't believe them, which we'll talk about in a minute. And so, of course, the market gaps down in the morning, and people think the world's coming to an end. But oh no, don't worry. We'll go over the chart in a minute. It did not. But really what I want you to get out of this, which I put in the morning news brief for everybody, was the layoffs, right? I knew these stocks were going to be up starting out. I don't know if they stayed up, but Amazon, they're laying off 18,000 employees. Salesforce cutting 10%. They did have 80,000 employees. So a big group of people getting laid off there. Silvergate, corporations in the crypto industry, they're laying off 40% of their staff. And as you can see right here, latest job data highlighted resilient labor market. Companies add more jobs than forecast in December. Jobless claims fall. As you can see right there, and down the bottom here, jobless claims are the lowest since late September. So it just keeps going down. And what I'm talking about with the bond market, that's one thing, I don't know, it's just messing this whole thing up really. I mean, has been told the bond market is broken, but they're basically, the Fed's saying, no, we're going to keep raising rates. We're not going to cut them. More importantly, we're not going to cut them in 2023. The bond market, smart money, is saying, no, you're going to cut. Now, why would they be saying that? Okay, and understand, as you've seen this, when the yields fall, what happens to the stock market? It usually goes up. In this market, that's what's been happening. It falls, market goes up. Doesn't care what's going on. But the reason why the bond market is saying that is saying, no, you're going to cut because there's no way the economy is going to be able to sustain at these rates, right? And when does the Fed supposed to cut? When things are bad. That's when they're supposed to cut. In the historical perspective, that's what they've done. Don't count 2019. They were idiots cutting those rates. They should have never cut those rates. But again, you never had a president beating up the Fed president on Twitter and in public so much. And so I think they just folded like a pup tent. So when you talk about the Fed's reputation and do you have trust in them? This stuff started way before this year and last year. This stuff started in 2019. I think they lost credibility starting then. But, that's kind of, well, actually, I think that, to me, they lost credibility starting in 2010 forward by propping up real estate and the bond market when they should have had no business doing that, but they did it anyway. So, that's what's going on. You hear people say, oh, man, the bond market's broken, or they're going against what the Fed's saying. And they're probably right, because the thing to worry about it, I'm not going to say they're right, but the thing to think about this is, and I thought about this today, I was like, man, you know what? Think about, and I've mentioned this before, the people running these hedge funds and the people running the bond market, big money out there, you got to think about how many of those were actually running these institutions back in the 70s when we had an inflation problem. I'm going to go with today, a minute percentage. They would literally, by the math, have to be 67 years old and still working. And that can be happening. I mean, absolutely can be happening. But the most of these people running this have never been through an inflation issue, right? They've never seen wages like they are right now. They definitely never seen a job market like this. It just for whatever reason, those rates aren't having any effect, right? Bringing liquidity out of the market, no effect whatsoever. That's why a lot of people call this to be a white collar recession. And yes, I do feel bad for anybody getting laid off. I've been there. It sucks. So I don't say it lightly when I use those numbers, because those people have families to support and bills to pay and life to live. But, what are you seeing? And I've showed you before, you're just seeing these big tech companies actually lay off people. And so, and I think in the ADP report, I thought, because that's really concentrated more at smaller companies, they actually did more hiring than people thought they were going to do. And remember, that's the backbone of this country, is the majority of businesses with employees 500 or less, right? It's just the big boys get the attention because they're traded on Wall Street. And so, going back to the bond, the AGs people, it's hard to do something you've never lived through it, right? All you've done is read books about it. And that's why you see in the Fed, I mean, they have, I think it was like 400 PhDs working for them, and they've gotten it wrong this whole time. Right? I mean, really, really wrong. Okay. And they aren't stupid people. They just never been through it. Right? It was all just this practical thing. Well, on paper, I wrote a paper about it in college, and it's a whole different story when you're living through it. And so the bond market's saying, no, you're still going to fold like you folded every single time when the economy starts to hit. And the Fed's saying, oh, no. Inflation is the number one thing. Even if the economy starts to go down, we're going to hold until inflation is under control. And if we hit a real recession, inflation should come down pretty dang fast. That's what should happen. But we shall see, and that's what a lot of people think the Fed is trying to do, is have a recession, force a recession, and then that way we can get inflation down pretty quickly, because when you're not buying stuff or anything and people don't have no money, so inflation will come down, supposedly. We'll see again. In the textbooks, that's kind of what it says. But, looking at what happened on the charts today, I mean, my Lord, this thing, it keeps, in this descending triangle. It sets there, it keeps bouncing right there off that trend line right there. And if you come into the 1 minute, I mean, this literally is a roller coaster today. I mean, look at this, how many times it hit the trend line, but also just look at the movement, up and down, up and down. Woo, look at what we're doing here. And I saw this right here today. Somebody put in Discord, I was like, that's what it feels like you were doing today. It's like, oh my Lord, up and down. Here we go, bouncing off the trend line once again. And right at the end of the day, they're like, oh, we fell below it for a second. Nope, we got back above it. We got to hold, right? And tomorrow, which we'll talk about, we got data coming out, which maybe we finally go up or down. We'll see. I still say we're holding out for earnings though. And of course, that's not the only index we can look at. We got the Qs right here, and you can see right there, looks like it's sitting right there on that support, and if that breaks, we're heading down to the lows, right? And of course, with economic data coming out, this being obviously heavy tech, we're gonna have to see right here. I mean, you might finally get that break, but you can see it broke out of that channel at the very end, the very close today. So we'll see if that continues tomorrow. And if you're new here, please hit that subscribe button. Really appreciate it. And if you're getting anything out of this, please hit that like and think about sharing the video, guys. But another one today was Tesla, and I put this down in Discord right when I got home, looking at it, and I said, no wonder Tesla can't get down to $100 or below. It has a massive put wall at 100 and levels of liquidity at 108, 107, 106, 105. And I even heard today, and let me know in the comments if this is true, that TD Ameritrade turned off the day trading power once again for Tesla stock, which they did. Remember, I think it was last week. They did that when it was tumbling. So they came out of the gates tumbling today. And those are the buy orders. You see all the orders sitting there waiting to be filled. And then you see this right here. I mean, look at that. $100 strike. I mean, that's massive. These expire tomorrow. You really think market makers are going to allow this to happen? No. And so, when you see that, you think, yeah, why would they allow it to go to 100 or below? That's why it got saved at 107. That's why it got saved at 104. And I think one thing you're seeing a lot of is a lot of people are selling puts because they're fine picking Tesla up at 100, 90, 80, that kind of stuff. And then the premiums are so high, they're like, they can take that premium, put it towards the purchase, so they're getting it even cheaper. And so they're fine with that. The big question is, and this is a question, I don't think anybody knows this. You'll have people that are fans of the company tell you one thing, but people who don't have an interest or whatever just say, yeah, I'll get into it. But the question is, how is the market going to value Tesla going forward? Is it still going to be valued as a tech company, which means you pay the premium for it, which means it will have a higher market cap valuation kind of stuff? Or are they actually saying, no, it's a car company, right? And the reason why it's big to understand is, and I just did the calculations, they still have a larger market cap than Toyota, Ford, and GM combined, right? And so I'm not saying either way. I'm not worried about how you're valuing. I'm not worried about how I'm valuing the company. What I'm looking for is how the institutions, the one making these mega purchases, are valuing Tesla and how they're valuing it, right? And so, you let me know in the comments what you think, but I'm not worried about you or me. I'm worried about them. And that's where you better be worried, because if they start valuing it as a car company, that market cap is going a lot lower. That's just the way it is. But they say, no, it's a tech company. then they're going to have a big valuation on it. And that kind of leads me into this. And I want to get your thoughts on this. This came out yesterday in an article, and this is forward PE ratios for 2023, right? And so you're looking at Apple at 24 PE, Microsoft at 25, Alphabet's at 16, Amazon 49, Meta 15. Oof, look at that. Tesla at 22. That's way down what it was. Nvidia is sitting there at a whopping 33, so it's valued more than Tesla now. And here's the year-end price target. So they're looking at 150 to 180 by the end of 2023. Microsoft 270 to 300, Alphabet 120 to 140, Amazon 120 to 150, which is, what is that, almost a double from where it's at now. Meta Platforms 160 to 200, Tesla 200 to 250. It'll be, I mean, that's 2 to 2.5, basically 2 to 2.5x what it is now. And then you got Nvidia 180 to 220. And so let me know down in the comments what you think and where you think some of those stocks are going to be by year end and what you would buy them at right now, right? Or what you're looking to buy them at. And, you know, I thought this day, I thought, what in the world do you think, where do you think the market would go, up or down, if the SEC came out tomorrow and said, we're going to suspend options trading for 30 days? Because, I mean, I've showed you multiple times, you know that's what's running the market right now, right? And especially all of these same-day expiration options people are getting into and getting out of. And I'm just curious. I mean, obviously, I think I know where it would go. I think it will finally be freed up to move, which it should be able to. And because one thing you're seeing now is just so many, now that we have access to looking at dark pool prints and the options change and all this stuff of what's coming in, you know, that's what's running it right now. Because, right, I mean, look at the news right now. I mean, again, it's not moving the market anymore, right? And so that's kind of disturbing. Well, when you look at it, it's not being allowed to move where it's at. And if the whole thing about TD Ameritrade stepping in again and stopping people from shorting Tesla and all this stuff today, because they definitely did it last week, I believe it was. If that happens again, I mean, come on, really? That doesn't make any sense. Like, something's fishy about that. And so I'm just curious to get your thoughts on it. But tomorrow, I mean, again, is this news going to move the market? Maybe a little bit. But this is what a lot of people are waiting on, and it's, you know, average hourly earnings month over month, non-farm employment change, the unemployment rate, and this ISM services PMI. And so, hey, is it going to be, you know, these economic reports that are going to open the floodgates to one direction or the other? And at this point in time, I say just pick a direction, and I'll be fine whichever way you want to go. You know, maybe so. Is this what they've been waiting on? I can't imagine, but you never know. You never know the market, right? But again, the only thing I can think they're holding out for is earnings. So, but we'll see. Could be wrong. Never know. It's a total guess. Your guess is as good as mine. Put down in the comments what you think the market's waiting on right now. Why it's just keeping us in this tight range right there. And it just keeps narrowing down and narrowing down. So it's got to make a move one way or the other. It's either going to be tomorrow or obviously here we go next week when earnings kicks off. So hope you guys have a good one, and I'll see you tomorrow. Hopefully it's not so much of a snooze fest out there in the market at least. So have a good one, guys.